Hi there, how you going? Welcome to the August edition of the Simic Report. We're going to stick with tradition. We're going to dive straight into property management with Bernadette, and then we'll close it off with sales. So, Bernadette, what's been happening?
Thanks, Dennis. So, we all obviously know and we're aware we're going through the pandemic through COVID. Last year, the property market was a bit up in the air in regards to rentals. This year, there's a huge supply and demand in properties, so there's a lot more tenants wanting to rent properties and properties available. So I've got some statistics in front of me from July last year versus July this year, and it's actually quite interesting seeing that the prices of houses around in our market area, so the houses, units, townhouses had significantly dropped in the July period of last year, where this year July had significantly increased. So we've got percentages anywhere from say 6% rental increase all the way up to 30% rental increase.
Wow, so July on July, year on year, 30% increase in some of those suburbs.
Correct, yep. So it's obviously measured based on, your houses, units, townhouses, so they are all different, they do vary in percentage. But just to give you an idea, in Hawthorn alone, you're looking at around anywhere between 22 to 30% increase
In value
from last year versus this year. So this is obviously important when it comes to lease renewals for rental properties, is increasing the rent. But we've also got to be mindful as well that we can't increase it at that, 22% rate where Hawthorn sits at the moment with houses. If you've had a tenant sitting in that, had a tenant in that property for quite some time, you just got to be mindful to be able to look after it. It is, yeah. Correct. So it's quite, it's just amazing seeing these stats. But then to give you another one on another level, you've got Balmoral with unit and apartments where the rental has actually decreased 15%
from last year. It's actually gone down.
Yep.
Yeah.
So that's where that supply and demand comes in fact, where if we don't have enough houses and there's more tenants wanting houses, that's where it obviously increases that value.
Yep, absolutely. Interesting stats. I mean, the expectation is everything's going up, but the raw data clearly shows Balmoral unit and townhouses and apartments specifically have actually decreased in value in rental returns. So these are the rental amounts. But touching back on what you were saying earlier about that, if you had a tenant there for 3 or 4 years, you can't just turn around and go 30% increase. You're unlikely to get that from the current tenant, but in the open market, if the current tenant didn't want to stay and you were to go to open market, then you potentially would get that increase in rent. But bear in mind, you need to factor in, you're going to have some advertising costs in there as well for that, to source a new tenant. So look at your yield, look at your return, factor that in as well. Is it worth that exercising? Probably would be, but that's the current stats. We'll dive over to sales.
Yep.
All right. Interesting you mentioned July on July. That's the same data that I was actually going to use unknowingly going into this video. There's no question, unless you're living under a rock or in a bubble, the real estate market's absolutely on fire. But what is coming through the media at the moment is the fact that it is very much, and we've seen this for quite a while, it is a two-speed market. So there's a lot of information behind a very general term that the market's really strong. It is very, very strong in the housing sector. Houses, block of land, family home, that market is absolutely on fire. And the stats that we are seeing, using your July on July, and I'll first refer to the first 7 months of this year, being January through to July, 14.1% increase in values in 7 months. You go July on July, 16.1% in a 12-month period. So the bulk of that growth has happened this year, with only a marginal growth going into Christmas of last year. However, if you compare that to units and townhouses, over a whole 12-month period, if you look at houses at 16.1, units and townhouses have only shown a 4% growth. And in some markets have absolutely just stayed flat. Now, there's a few reasons that are driving that market. It's obviously the owner-occupier market. Units and townhouses, typically investor stock. They simply just haven't been getting the returns because at the back end of last year, in the last 6 months, the investor market's been very, very quiet. What we have started to see in the last 3 to 4 months is a 75% increase in investors coming back to the market. Now that's underpinned by the data that you're saying, with the increased rental returns, supply and demand shortage of that stock. But that percentage is actually 74.8 to be exact, actually comes from investor loans that have been written for this time versus last year. So massive increase. So it's not 3 months as I said earlier. It's from 12 months ago. Obviously a bit of uncertainty last year about tenants with the ability to pay rent. So the investor market did go very, very quiet, which we knew. But a 75% increase in loans being written just for investors themselves. Why is that driving? What are all these factors? What's underpinning that data, and what's fueling the market? Clearly, supply and demand.
Yep.
There is, and the data that we're now starting to have access to, there is 40% higher sales volume in the current market conditions than the 5-year average. It's the highest on record. 40% higher than the 5-year average. We're also seeing a negative 26% availability of stock than the 5-year average. So 25%, or 26 to be exact, less stock available in the market than the 5-year average. When you have that significant outstripping of demand versus supply, that's what's putting pressure on prices. But again, it's being underpinned by owner-occupiers with record low rates, which we foresee to be for quite some time to come. That's what's driving those property values. The unit townhouse stock, where they will start to see some increases in value, and they will be marginal. They won't see the same increases like house stock, will be underpinned by that investors that are coming back to the market. So that's the data that we're seeing as we get into August. We expect it to be the same right the way through for the next 6 to 12 months. But as always, we'll give you the information as it comes to hand. And we really hope you enjoyed the August edition of Simic Report. We look forward to seeing you in September. We'll see you then. Cheers.